The purpose of this video is to provide you with some guidance in approaching questions in an assessment. The purpose is not to consider the content of the specific question, but rather just a general technique that you can apply in assessments. Generally, a good place to start an assessment would be to read the required section, as it just focuses your mind on the task at hand. In this example, the required section reads as follows. Prepare the inventories, raw materials, and inventories, finished goods, general ledger accounts, to account for the information above for the financial years ended 30 April 2013 and 30 April 2014, in accordance with IFRS. It is important to note the note section, as this may set some limitations in what they expect of you out of the required section. Firstly, all amounts calculated must be rounded to the nearest rand. We are applying the periodic inventory system, which is particularly important given the fact that we are to do general ledger accounts. Further, there is a stipulation that transaction dates are not required, so don't waste time on doing these in your accounts. At this stage, it is possibly worthwhile just pausing for a moment and considering the theory that you will probably apply in the given information. Given that it's general ledger accounts, given that it's periodic accounts, perhaps just pause for a moment and consider briefly that inventory accounts using the perpetual system, or the periodic system at least, will include opening balances that is transferred to the nominal section, and then the creation of the closing balance at the end of the reporting period. Once you have considered the required section of the question and you have triggered the pieces on your memory that you think may be relevant, such as this case general ledgers under the periodic system, you now consider the content of the question. It may be useful in this purpose to link to examples as you read the information, or to draw yourself diagrams or timelines of information provided. For example, in this section it says each finished goods item produced consists of 3 units of raw materials. So one can visually represent this, perhaps as follows. No prescriptions in this regard, whatever would work for your circumstances. In this case, there we have the finished goods and the 3 raw materials that may be included in that finished item. Further, the sentence says that these raw materials are only used in the manufacturing process, not for resale purposes. Perhaps you might want to make a note for your side on the side of the assessment somewhere that this is just emphasizing that IS2 paragraph 32 is applicable, and that these items are held for use in production and not to be sold as raw materials. At year end, 30 April 20x13, dates may be important. You may decide to use timelines, you may decide to circle these dates. Information is then provided in a tabular format. Consider the information provided. In this case, it has to do with the net realizable value and cost of raw materials and finished goods. Think back to the material you have studied, and perhaps make a note for yourself on the side of this table which example may help you in answering this, perhaps which section in particular of the standard that is under question may assist you, just narrowing the focus of your mind to what is applicable in that paragraph. To illustrate what I've just mentioned, consider the following information. At 30 April 20x14, there are still 250 units finished goods on hand that has been on hand at 30 April 20x13. It is important now to realize that the time period has changed. This is within the normal operating cycle of the company. Again, a term you may be familiar with in your studies, normal operating cycle being defined in IS1. It is perhaps not that relevant to this information in this question, but it's still worth noting just in case you need it. All raw materials were however used during the 20x14 financial year. At year end, 30 April 20x14, the following information is applicable. Finished goods, the number of units, cost per unit, and the net realizable value. Pause for a moment and ask yourself, where have I seen similar examples of this? Where have I seen this in the standard? This is now referring to instances where the net realizable value has changed in a subsequent period. Pause again. What do I know about a change in net realizable value? Am I allowed to reverse it? To what extent am I allowed to reverse it? Is it only for inventories on hand? Once you have gone through the question and now applied what you have noted from your comments and put pen to paper, before closing your book, just for one last time consider the required, and have I actually answered the question that they asked? As a final comment, remember also to note that if we say in the terms of International Financial Reporting Standards that IAS 1 indeed requires comparative figures to be presented, it will need to be specifically excluded that you do not need to do this. Otherwise, you will need to present 2 columns in your statement of financial position, etc.